Alrighty, as promised, this is going to be a video talking about liquidity. Now, liquidity is an interesting concept. So before we look at the charts, I'm going to talk to you just conceptually about what liquidity is. So liquidity is basically how much availability to to fill a trade there is. So let's just say you are big whale guy, right? And you want to buy $100 million worth of something. Okay, let's just say this is true. Okay, now if you want to buy $100 million worth of something, you have to have someone else sell it to you. So someone else has to be the equal part of that trade. If you're going to make $100 million deal, somebody else is also making $100 million deal. Or you could have lots of little fish. And we could have 100 million fish with $100. So we'll do this. Million fish with $100 each. Okay. So each of these guys are technically the same part of the deal, right? A really large guy needs either another really large guy to match his order, or he needs lots of little guys. And usually what happens is this is what happens. Lots of little guys get drawn to an area, and then the big fish comes along and eats them all. And I'm going to try and show you what that looks like. So basically what's happening is we're going to get a key level. So let's imagine this green line. We've already got the green dot in. I'll put a red line for it. Okay, let's imagine this is our key level, right? It could be any level, anywhere, just for like, just for, just for like, I guess fucking a random number. Let's say we have this special key level of $500. Okay, it's just a round number. It's $500. People see it, they think, oh, this is going to be an area, and maybe right to make this even more of an area, if I can find it for you here, we have something like this happen at the key area. Maybe price comes and does this shit. And so what ends up happening in these trades is each time price comes down and makes this key area a support, people who are longing, little guys, big guys, everyone, people who are longing along here need to have a stop. And they need to have a point in which their trade is invalidated. And you do the same thing. So you might have your trade somewhere along here. You might be trying to buy off this. You put your stop below here, and you might be targeting up here somewhere, hoping to get a good trade. And let's just say your target is too high up. Let's just say your target's way up here. And price comes up, doesn't hit your target, then comes all the way back down. Now you're going to still be in this trade, and your stop is still going to be down here. Now price comes down here, and more people join the trade. Now these people also put their stop somewhere. Where do they put their stop? The logical area. You don't want to put it too far away. You want to put it nice and close to get a good R to R. So you put it below here as well. So now you have these guys who put their stop below here. Some of them might have taken profit. A lot of them haven't. You got these guys who've gone and put their stop also in the same spot. And then over here, we've probably got another group of people doing the exact same thing. And all of them are acting logically and rationally. They're all using the local low as their stop. And so what ends up happening is these areas become hotspots for liquidity, for lots of people to pull. And so what ends up happening eventually, right, is the price then comes down through here. And when price comes through here, all of these people who have their stops, all of these people who have their stops here at this level are forced to stop out. So when you're forced to stop out, what happens? Okay, stop out equals Your emergency exit button. So if you're in this trade and you hit your stop, you're basically saying, okay, I don't want to be in this trade anymore because it's going to cost me too much money if I keep being wrong. If price keeps going lower and lower and lower, I'm going to keep cost me more and more and more money. So I want to exit at a certain point. So your stop is your emergency exit. But what that also means is that when price passes through that emergency exit point, you panic sell. So here, when price passes through here, I have to sell to somebody else. My stop has to be bought by somebody else. And so what happens is whales who need a very large amount of people in order to get their entry, they need a lot of people on the other side. They get heaps of people here to fill up their stops. So let's say maybe we have over here underneath this stop, we have like, we have to get 100 million, right? Let's just say we have like $20 million, right, worth of people's stop orders. Oops. Okay, let's just say we got that. There's 20 million here, and then over here we've got like another arbitrary fucking number. Okay. Okay, the numbers don't matter, right? So let's just say there's 20, 20, $60 million worth of stops here, right? When this passes through here, this guy can get his $100 million position because he's forcing this guy to sell at his stop. He's forcing these guys to sell at their stops. He's forcing these guys to sell their stops. And so all of their emergency exit buttons basically get pushed because price is going lower and lower below the key level. And so they're all panicking, thinking it's going to sell lower. And they may not be watching. They may be off at lunch. They've set their exit position, just like you do when you put your stop. They've set the exit position here as a safe exit. And so when price comes down here, it forces all these people to exit. This guy, big whale guy, wants this. He wants these guys to get forced to their exit. So he buys all of their positions as they're selling in this key area. And this is where we call the liquidity. This is the area where everyone's stops are, and they're getting. It's where the whales are looking to push price to force them their exit and then collect it, so that they can now enter. So these people have all sold, and the whale has now entered by buying these positions. And now that the whale has bought these positions, what do you think he wants the market to do? He's just bought $100 million worth of longs. He's not going to dump the market, and he has way more money than all these people. What's going to happen next is the market is going to pump. So we're going to pump. And why are we going to pump? Because this guy, $100 million man, wants to make money. And if he wants to make money, he has to do the same thing that we've just had before. He has to find somewhere to exit because he's $100 million. He can't just sell it in the middle of nowhere. He has to find an area where lots of people are waiting to sell. Well, buy, because he's going to sell his position. So he needs to find somewhere where lots of people are waiting to buy. Where could that be? Well, if you have a look up here on this chart, the tops of this, bang, 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 also create liquidity, just in the opposite direction. So he's going to bring price, often very quickly, straight up to this liquidity area where he can sell his positions into all the short stops who will be forced to exit as well. And when they're forced to exit, he can use that as his way of cashing in all the positions he bought down the bottom. So he bought these down the bottom for 100 million, and then he can sell these up here for like, say, 110 million for a 10% increase and a nice $10 million profit. And that's what people do. So what we're looking for is we're looking for price to form clear liquidity areas. Then when price goes through those liquidity areas and confirms that it was a fake out, that it was just sucking those orders in, then we look for the next liquidity area to where the whales might want to push the price. And we use that as a way to find trade. So you're not doing any of the hard work yourself. You can't move the market around. You're just a poor, well, you're not poor, you're incredibly rich, but you may not have the capital right now to move the market. So you don't. You let someone else do it for you, and you just figure out where they're going so you can be in the right direction. So hopefully this makes sense. I'll show you an example. Okay, here's an example. It's not the greatest, strongest example ever, but it is an example. Okay, this is from before. Okay, let's just have a look here. So we have this level here, two levels, right? Exactly what we talked about. So people have their stops below here, people have their stops below here. What happens? Price comes and takes that liquidity, and then usually from here, price would push up. But it's sneaky, and this is where trading can be tricky, legitimately. It does one more push through and takes liquidity again. So you've got liquidity from here, liquidity here, liquidity from here. And usually what that means is they didn't have enough money to fill all their positions just from these two. So they had to make one more. But they make one more. Price comes lower here, takes all the stops from everybody from these three areas. And then what happens? Now that price has taken this, it now looks to the next area of liquidity where it can offload. And where might that be? If you have a look up here, it should be, sorry, I just delete this just so you can see. It should be, in my opinion, the tops of these two. You usually want at least two points for it to be liquidity. So here, 1, 2. That means you've got people with their short stops waiting here. Price hasn't come here yet, but let's wait and see, right? It's gotten pretty close. And usually when price has already done this, if you look, it's moved pretty strongly, almost directly to this area. Because there's a pretty good hint it's going to finish off the move and actually go across the red line. Because if it doesn't cross the line, the liquidity has not been taken. Very important I say that. So if price comes up to this red line like this, but does not cross it and does this, that is not taking liquidity. That is building more liquidity because now there are again more stops just above here. So when it does finally push through, there are even more people waiting. So if I just show you this, if price does this, it is building liquidity. And then when it finally pushes through, it'll probably be even stronger because it had so many more orders to take. And so let's see and find out what actually happens in this trade. Okay. And there you go. Boom. Your boy is right. So now we've taken liquidity. Oops. So now we don't know for sure whether we're going to keep going up and trend higher or whether, because we've taken this liquidity, we now go all the way to the other end. But the way I like to take these trades is find a key area that's been built like this, 1, 2, 3, watch it get swept like this, and then see how, let's just imagine you're watching this. See how after it came here and dumped, it pushed up pretty strongly and closed above where it dumped from. Like it closed above there. It closed above the wick as well. It closed above that. So it came down and then immediately pushed up really strongly. This is a pretty good indication that it was faking people out, that it was going below the liquidity area and then pumping right above it. And this usually gives you the indication that it's going to do the liquidity grab move and now go to the highs, the liquidity at the highs. So then you get a slight pullback, a very slight one, and then you just basically start pushing aggressively all the way up to the other liquidity area. And so that's a really common, really easy trade to take. So let's try to find another example. I'm going to just fast forward this. I'm going to close my eyes for like a little bit and just see whether we get, yeah, let's just teleport. Just teleport past all of this fucking information. So I can show you, just with live data. Because I want to sort of like mess up the chart a bit so it's not too recent. Not that it makes a difference really. But that way you also know for sure that it's not some pre-prepared bullshit I've got from earlier. Okay, it's looking better. I'll slow this down now. We're fucking teleporting through time and space. All right, back to the 5 minutes. And all these things work on any time frame, so you can do whatever you like. All right, we're talking about liquidity, right? Let's wait and see. Okay, so here's an example of liquidity right now, instantly. One level here, 2 level here. So you got 1 level there, 2 level here, and clearly it's wicking right through and then closing nicely above it. Yeah, that's really important. If it closes below the liquidity, it looks more like it's dog shit, to be honest. And then it has to pump above it. It looks nice when it does this kind of thing. Goes below it, closes above it. So we don't know for sure. It could roll over. It could make it look really silly. But it would be nice. It would be really nice if this just ends up popping above. And so if we ask ourselves, where is the liquidity above? I would say um, around here. So the issue I have, right, is this liquidity got taken by this because this went right through it. So this went right through this level here, and that sort of resets the liquidity. And then it built it here. So you sort of have this one only that hasn't been taken because this one took it. This one built it, this one took it, this one built it. So you almost like you only have this one really. It's not that strong. If I had 2 here, I'd like it more. But you have some liquidity from here, some liquidity from here, some here. It's still more likely this is the level it goes to. We could be wrong. Let's find out. Come on. Come on. No, I can tell already. Oh, shit. All right. That was not the best example, unless we... No, it's not the best example. Okay, I'm going to find another example. Give me some liquidity, boys. Oh. Okay. So the reason why liquidity happens in the market so often is because large players can't move and get in and out of positions without it, without having to engineer liquidity and then sweep it. So, okay. Another example, or another way you can do it as well, which is worth me pointing out and showing you, is see how this is trending up. High, low, high, 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 low, high, 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 low, high, high. Okay, we're trending up, right? As we're trending up, what happens is we create liquidity here, here, here. There are people stops below all of these. And what will happen is price will eventually dump through these. It will go against trend and catch the force people stop outs and then reload reload the longs off the liquidity and then push up. And so what we can do is when it comes down through here, we can long. And hopefully it happens and it'll look really cool. And if it doesn't, then you know, well, oh well. Maybe it doesn't. Come on. Come on. I'll just click it faster. Yeah, okay, no, we didn't. We didn't come back into it, which is fine. Okay. Nice. All right, so basically, if this is trending up, one of the ways that I would look for setups is I would look for it to take liquidity on these people's longs. Because you got to think, the price is going up, it's really easy to long. It's basically free money for it to go up. So what happens is eventually it comes back down to these areas where people have their stops, and it basically punishes them for not taking profit yet. It goes to their exit point and then pushes up really hard after taking them out of the trade. So we're going to look for that setup to occur. Okay. Can't get a fucking sore wrist from clicking so hard. Okay, we're almost there. We're almost there. Click, 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 click. There we go. Okay. So, here's one example. It's not the best, but it's not bad. So we're engineering some liquidity here. If you look, it didn't go through this one. Slightly higher each time, ever so slightly higher. If it went lower, it would be taking the liquidity, but instead it's building. We got 3, maybe 4-ish. So let's just wait and see. It'll come back, I think. Here we go. Coming back. Hello. Come back. Here we go. Took a while. Fuck. All right. Come on. Come on. Through the liquidity. Through. Down. Down. No. Down. 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 There we go. Okay. So we dump through that. And look how right after going through that, next few candles are recovery candles. So we want to try and see this close above here, then start to push a bit. If it starts to push a bit, we can use it as confirmation and try and target some of these fucking these highs. Let's wait and see. Oh, that looks a little bit hot. That looks a little bit hot. Okay, we look like we're on. Yeah, so that's a nice candle after a little pullback. I like that. Let's take that. Let's put our stop below here. Let's put our TP up to here. And we're going to try and target is like a liquidity area here. Sort of 1, 2, 3, 4, 5, 5-ish candles. The same top. Let's go. Let's do this. Bang, 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 bang. So because we've already taken the liquidity here, it's reasonable to assume it'll take liquidity at the top next, so people who are in this trade can exit. Oh, almost hit my stop. That's not good though. It looks pretty weak. Here we go. Yeah, come on. Let's go. Let's go. Not bad. I think clicking faster makes it go harder. There we go. Boom. Your boy, the king. He's back. All right. So basically, if you saw, it built the liquidity here for fucking ages. So, oops. So this area here was basically building a lot of people's stops below this area, a lot. And then it finally shoots up, more people stops, and then finally when it comes back down, seeing it come and recover strongly up here gave you indication that you could catch this. And that's also why, if you notice, I put my stop below this low. If I was greedy and put my stop any higher, I would have got exited. But I mean, that is the game. So there's an example for you, hopefully, of how liquidity works. I've given you a few examples. I'll try and find one more just for good time's sake, so you know what the fuck you're looking at. But you'll start to see it more and more because the market can only move with other people getting forced to sell their positions to big boys. It's part of how the market works. So if you start to recognize and see it, it's pretty good. It's pretty useful. So like, if we look here, we can see we're starting to build liquidity around here. It's something like this. Let's all right. There we go. Equal low. So if I just pause this for a second. Okay. Interesting. So basically, liquidity below here, liquidity below here, and to an extent, liquidity below here. Because if you notice, this one did not go below here. I can draw the line for you. This is the bottom of that. Did not go below it. This is the bottom of that. Did not go below it. So the stops for all these people here, the liquidity has not been taken. It's still being built. So let's fast forward a little bit and see whether they come and take the liquidity from down there. Actually, you know what? I should have fucking I should have left the red lines on. Yeah, what's the point of fucking drawing the lines if we're gonna delete them, eh? Alright, here's fucking 1 a.m. so you have to forgive me. Come on, take the liquidity, let's go. I'm doing examples for the class. I'm gonna wait forever. Yeah, baby. Oh yeah. Alright, so there's one. There's two. Okay. It looks ugly now, right? These are red selling candles. We want to see it come close back above here. Yeah? Back where the liquidity was built, we want to see it come back above here. If it doesn't come back above here, it looks ugly. It's probably going to trend lower. Oh, it must have heard me. Okay, so we had a bit of a recovery here. You could probably buy off this candle. You'd probably definitely buy off this candle. This juicy looking like strong boy. Price has already come back a bit, so I'll just put an entry here. If you notice, it's probably price is probably going to come back and push on top of the previous sell candle. See the sell candle here? Price pushes up, comes back and tests the previous top of the sell candle. It's already tested this, so I might try and squeeze the gap out because I don't think it's going to come back that much more. All right, and then my TP, because you've taken the liquidity, where is the liquidity at the top? It is up here. Um, mm, Probably around here. See, this one took this liquidity already. See, that would be a really easy, obvious liquidity if that one hadn't already taken it. But it's still not bad. It's still like, there's still a good amount of liquidity hanging above here. Let's go up to here. Let's try it. Let's go big boys. Yeah, let's try it. Fuck it. 2 order. Let's go. Place order. Send it, puppy. Let's go. Oof. Not good. Not good. Not good. 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 Not good. 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 Come on. Come on. Ah, terrible. All right. That's fine. Yeah. So if you notice, this one never goes at the top, right? No, it doesn't. So it just trends down. So what happened here? What actually happened? I'll tell you what happened. There wasn't much liquidity up here, which is what I was trying to point out to you. Where it did go to was just a very, very, very local liquidity. Not very exciting. It went to here. So like the top of this move, where the down move began, it just went to the top of that. And then didn't get any higher. Yeah. So I mean, not the best example, but that is part of trading. That's what happens. So what you can see as well, not quite the same, but what I like to look at, if I see a big run up like this, where you're almost floating on air, it's got a lot of like these big gaps. It's probably going to come back and retrace all the gaps, all the ones that are fair value gaps, what they call single-sided gaps, where it's went up one direction and we never had another side. See how like this one comes up, has another side to close it off. Even like here, you push up on green, you come back down on red. Push up on green, down on red. Up on green, down on red. This is like, oh, whoops. This is like up on green, you never come back down on red. Up on green, you never come back down on red. So you do come back down on red later, but it's fucking over here, boy. Yeah, now you come down on red and you fill in what they call the gap. So where do you look for a long if you're doing this? I will show you, my friend. This is a little bonus because you watched fucking how long of me waffling. You deserve a prize. So we go from up here to down here to down here. And this is like the last sell, sort of like sell action where it did a down move before we fucking pumped. So let's go over here. Yeah, there we go. We tapped it. So if you look, price comes down and taps it. It could most likely even hit this midway point. We'll put an order in just in case. You never know. Might surprise me. And let's get a run back to here this line. Just do this. So we did. So we got to my TP, but we didn't film it. We just bounced from there, like I said. Yeah, just that one. Maybe one more fill. Let's see. No. So it tapped here, but it's usually the first tap. Second tap, if he comes back again for a second tap, often doesn't respect it. Often. So one thing to note as well, since we're talking about liquidity, I think we can see it here. Yeah. So there is liquidity for this massive run up. All the longs, their liquidity is in this area here, below here, below here, below here, below here. So we can see prices now coming to that area, basically the area below the green zone. And now prices have turned back into the green zone. So this could be a liquidity grab back up to here. See how there's a very clear liquidity area here? 1, 2, 3, 4. 4 pockets of more actually is over here as well. And here. So everyone from over here has their short stops up here. Everyone from this massive move has their long stops down here. And we've just gone into it and bounced up. So if we get another good candle, see, that was a bad candle. We went deeper into it. Now we got a bit of a buy up. This looks like we could try to target up here. I may be early. I could just literally be shorting into a trend, into a downtrend. But this is how liquidity works. The challenge with liquidity is you're always going against the trend, basically. Okay, let's see if this ends up playing out. Okay. I don't know what he's talking about. Anyway, okay, let's see what happens. Do we go higher? No. So what we did here was we stopped me out, which is fair. But if I show it to you, we did literally what I call like a little liquidity grab. Only a single one, but we had liquidity here. Price comes up, comes back down, and goes below that, then bounces. Why does it go below this area? Because the liquidity is there, and it had to fill its positions. The big boys, whoever the fuck wanted to, needed to fill their position here and get size before they could move up. So the fact we've just taken this liquidity and done this nice move, then this nice follow up, actually gives you a good reason for this trade should play out. So I'm going to take the same trade again, just move my stop, yeah, to this new low now. I mean, it could get taken again, but the fact that liquidity just got taken actually gives you a good indication that price is going to go to the other direction. So don't be discouraged. Oh, what is it doing? There we go. Oh my god, I'm fucking retarded. I keep trying to put a short in. That's how tired I am. Okay. Yeah. I want to put a long in. Maybe that's the universal limit. I should be shorting it, not longing it. We're about to find out. Okay, let's see. Do we go up to the liquidity? Do we just pump up to the fucking liquidity like we're meant to because we just took the liquidity at the lows? No, we take the liquidity at the lows again. And then we're going to pump up now. Now we're gonna pump up. Now we're gonna pump up. Okay. Play. Yeah. We're gonna pump up now because you can see we're trending slightly higher lows. Okay, let's see. Do we go below here or do we pump to liquidity? Because this is basically where the low is. We shouldn't go to the low before we go to liquidity again. We should go to liquidity. But it's not looking very hot, is it? We'd keep our stop below here, so we'd still be in our trade. I'm gonna fucking click this shit through. Come on. Come on. Come on. Go to liquidity, please. Go to liquidity, please. Oh my god. Come on. At this point, you would have fallen asleep. Yeah. You probably better have fallen asleep so you don't see that garbage happen to you. All right. Well, that was not a great example. At least you know this is fucking authentic and real. Hey, I don't prepare examples. I just trade. So to summarize, often happens when you get something like this, where you get like a clear level, then a nice liquidity grab, then a strong close follow up after. Maybe that's the most important thing I got to reiterate is you need to have a strong follow through. All of these ones, I guess it's got to show you failures too. Hey, these ones didn't have strong follow throughs. So if I give you an example of it, where was liquidity example here? So for example, here's the liquidity getting taken. We go down here through the liquidity. We don't have a strong push and a close where we get above here. Like we never close above these areas here. We should be closing above here when we push up to show the strength. Instead, we just do this shit. We basically reject off it. Yeah, so we can't get above there. Trying to get above there results in us dying. Oh, look at that. Trying to get above there results in us dying. So I wasn't wrong, hey, when I said, here we go. This area basically ends up being where you need to close above if you want to get a strong push. So here's another example of a lick grab. If we find it, so this liquidity here was liquidity I was saying we would put our stop below. If you notice, this is a very classic move. So liquidity is below here, liquidity is below here. Price finally dumps through this liquidity, does this zigzagging sideways thing where it's like basically flat for a while. That's big guys buying their position while chopping other people out, like people panicking, think it's going to go lower, and they're just buying their position in this zone. And then after they've bought enough of their position, it pops up. This is where it looks. Look at that. Look at that strong. What's it called? Move back in here. So it reclaims. When you get pullback, you get the retest. So this is where you could try to get a position on when you get the retest. After it pulls back in, you get the retest, and then you can try to take it up. And now it would not surprise me if you finally get our fucking liquidity up here. Okay, we probably would get that now. Let's see. There you go. And this is the liquidity area. And now it's possible, entirely possible now, we have a bit of a sell-off as it comes over or it keeps pumping up. Let's see. There you go, a bit of a sell-off, like I said. And now it'll try and push through again. And if it's already taking the liquidity, it's much easier to push through. And this is often where it'll just pump through and then create a new level. And the price keeps going. Let's see. Because if it pushes through now, then it just keeps trending. If it doesn't push through and falls over, then it ends up creating like another sort of like liquidity zone area at the top here again to try it and test out in the future. Like here's some liquidity right here. Bang. You can see it's an equal high. Yeah, it's an equal high there. So would not be surprised if later on we come back to take this. Let's see. We might even go for a pump soon. Okay, so there was some liquidity here that we just took. Just did that wick through, that push up, that nice candle. It's probably just a very small move, but we might push up to the top of this now. We might. No. Now it looks silly. Oh, I don't look too silly. We never did that, did we? No, we never went to that green. We never went to this top liquidity area here. Yeah, just an example. So now, I mean, just for trading, you can see this is going lower. I like to draw these channels in when I can see a clear pattern. So you can see 1, 2, 3, clear pattern. I like to do that. Now, if I was trading this, just how I'd be trading, I would be looking for a short at the top of this channel. Okay, top of the channel, let's try and short it. Okay, let's try and short it. Let's see whether this fucking plays out, eh? Let's see. We're going to target this liquidity down here. All right. Let's go. Last trade. So you can use liquidity as a way to take TP as well. Let's find out what happens. Don't go to my stop where the liquidity is, please. Okay, thanks. I think he's too tired. Okay, it's gonna go to the liquidity up here. First one's here. Next one's here. Yeah. Cool. Cool. So it's gonna hit that liquidity area there. Okay, so it looks to me like it took this one here. Nice work, and then it went up. Have we got to this area? There you go. Basically gonna get to that now. One more push through, I think. No, maybe not. Lower highs. Now it rolls over for a bit. And you would expect it to come down to this area. Remember how this did a big push up and left a big gap? And we were saying before, it's gone up on green, but it hasn't come back down on red. Don't be surprised if it comes to this level here. Let's see what it does. Come on. There we go. Perfectly. So that's what you can look for. Pushes up, you can look for it to retest back to here. And then this is back where it becomes normal, right? It's doing normal moves up and down, up and down, up and down. And here it's just going straight up. So it usually has to come back and correct it. So that's an area you can target. Yeah, anyway, there's some trading for you. Liquidity is a bit more challenging. Definitely a bit more an advanced concept. And I'll try and make more videos explaining it with better, with better examples because, yeah, liquidity and how it gets engineered is basically how the market moves. And you get a lot of this happening, especially around key levels or key areas and events. But yeah, anyway, have a good night or a good life. See you.